Alrighty, here's another potential setup for a little scalp on the pound US dollar, and we're on January the 12th now. And yeah, on the hourly chart, what's happened here is we've started to move up here, and we've just taken out the high here barely. But I think that there's an opportunity for a scalp trade when you look at the trend is actually heading up here. We're actually we're waving higher in here now. And looking at the 5-minute chart right now, we've broken out of this range that we had here. Retail sales came out today, which was initially quite they're very good. They were better than expected, and which was good for the U.S. dollar. The other currency pairs had quite a drop, and now they've rallied back up again, and significantly, well above the day's highs, and broken into a new trading range up here. And we'll see if this holds up here for a little bit, but the buy we'd like to do is right back in here at these old highs. Look at this, how it matches up with this 50% rally of this recent run up in price here. So I'm going to go ahead and put an order in right back here at the 50% number, 195.02. We'll add in the spread, of course, of 5 pips, so 195.07, and we'll put a stop 20 pips away down at 87 for now, which actually is nice. It puts it just below the 62% retracement level. So let's go ahead and get our trading station out here. So you got to have all these things known in advance before you start putting your trade in and start thinking about where you're going to take your trade off. Okay, so we go to the pound US dollar, and we want to buy, and we'll buy a 10 standard lot, and we'll buy it at 95.07. Stop at 94.87. Click OK. See, you have to be get good on your trading station so that you can put these orders in quickly. Check your order. We're buying at 95.07. We're currently 95.30 by 35. That's good. We're buying it below the market on a retracement pullback, and our stop is 20 pips below there at 94.87. So that's all fine. We don't have any limits in yet. We'll get filled first, and then we're going to start to scale out at various profit levels. Initially, we're going to try and just pick 10 pips off of this. And so we have a logical place to buy based on old highs becoming support once they're broken. Okay, we have old highs that are broken to the upside. They should now become support once price retraces. Exactly where you buy here is somewhat discretionary. Price may come back and just touch this high and bounce up, and we'll miss the trade. Well, that's the way it goes. Don't worry about that. That happens. I like it down here because we have a little bit better cluster of support down here with this 50% at 95.02. This 94.08 right here is another nice little area of. I've just put this line in here. Just to show you, probably it's 94.98 is what I meant to say. 94.98 is the M3 pivot today. We'll just mark that on here. M3 equals 194.98. So we have 194.98, 195.02. See, they're only 4 pips apart. Plus, we have all these highs here. So I like this as a good potential area of support down here. We pretty much have a triple confluence of, convergence of factors to be buying down here. Now, if this high is exceeded and price is starting to rally here a little bit again, then we need to redraw our Fibonacci's using the same low, but going back to the most recent high point. And, this may just continue going up, and we just simply don't get a pullback. But you make the market come to you. Don't start chasing it, doing these kind of mistakes, or you're going to end up in trouble. And in fact, as we're speaking here, 95.50 is the old high, and it's looking like it wants to press against that a little bit. So we'll come back shortly and see how things are progressing. Okay, we have a little further action, a little further information. You can see what's happened. We've actually made a new high here, higher than the one that we initially measured our Fibonacci pullback from this low up to this high. So what we need to do now is readjust this and use the most recent high point. See that? Up to 195.57, which changes our Fibonacci pullbacks a little bit. Now look at where we come to. The 50% comes right back to these highs right here at 95.05. So really we should change our order a little bit. We can still go for the 95.02. There's nothing wrong with that. We're talking about the figure down here on the British pound, which is can be a significant number. Not so much here because, excuse me, we've this is it. A fairly, this number's been played with up and down a little bit already, and but it's still an area that we want to watch. The figure, you can see how the price bounced off it over and over again here before finally breaking through it quite decisively here. So a buy back down in this area anywhere should be okay in that. So we're going to be looking at 195.10. We'll just adjust our order a little bit. So we go back to our dealing station and right click that and click on change order rate and make that 95.10. Click OK. And there we go. How about our stop? Let's make it at 90 now, 95.90, and just keep the 25 pips. In fact, let me just have a look at this. Yeah, let's make that at 95.90, and we just click on this 95, or probably 94.90 is what I meant to say. Change, and there it is. See that? Okay. So, not much else happening. So let's just stand by, and I'll be back when there's more to report. Okay, hi again. There's not much to report here. I just wanted to show you what I've done here as far as sort of managing this setup. What I've done is these red dotted lines are trade alerts that I've put on my computer so that I can go about my other business for the day here without having to sit here staring at this screen. Because see, I'm not interested in this unless it comes down to my price here, or if it takes out the highs here, I have to redraw my fibs. So what I've done is I've just simply put a trade alert if it takes out the high, and I put another alert if it gets down near my price. Well, then I can come, go and have a look at it and start to manage the trade properly. So it's just a sort of a tool to help you with your trading, so that you don't have to, sit around staring at your screen and going bug-eyed. There's no point in doing that, and just wanted to point that out. Well, this baby doesn't want to cooperate with us, so you can see what's happened again. Excuse me. We've rallied once again above the highs, meaning that we have to redraw our fibs one more time from the high. And now we've got about a 62% pullback, which is very interesting because it's still coming to our same area, 195.02.05, which is near the M3 pivot. This is still a good trade. We still have a few hours left in the day, so and I wanted to show this slide, or this trade example here. That this is a live trade, of course. This is actually going on in real time here, to show you that what you don't want to be doing is chasing the market. You need to have it come down to you. And because I have other things I have to take care of now today, it'll be interesting to see how this turns out. However, I have other business that I have to attend to, and I'm going to now have to cancel my order for this. So remember to do that. Go in here and just remove the order, and it's done. Okay, and that's the end of that. And the point I wanted to make here is don't chase the market. You're going to get your head handed to you if you do things like that. Let it come to you. We have a logical place that we'd like to buy. Hey, the market's right, we're wrong. Okay, the market's always right. So be patient, and you have to decide where the logical buy position is, or sell in the case of a sell, and stick to it and don't chase it. Here's a case where it just didn't come back for us at this time. It may or may not later on. Again, if you have to run off to do something else, close your position out and leave it alone. There'll be another trade opportunity tomorrow, so just leave it for now. Anyway, another example, but this time, of course, one that didn't work out, didn't cost us anything, but we just simply didn't get filled.